Good morning, team. Happy Saturday. So, we have had a tremendous week. We made some really, really good money throughout the week today, both on the long side and the short side. If you guys were following along with me, you've made a lot of money. If you're not, like I put it on the chat, ask yourself what was going on in your head. What were you looking at? Why did you stay longer than you should have stayed? Why didn't you take a trade and so forth? And just analyze, go back, post market analysis. It's crucial. Like when maybe weekly. I try to do it daily, but at minimum weekly, I go through my trades and I go through my charts and see where I got in, what I was looking at, and then at least a week later, maybe a month later, realize, okay, why, see it with a fresh set of eyes. Why did I get into this trade? Is it still valid today? Would I have done it right now again? And like that, you start learning your tendencies. You start learning if you're making mistakes. What is it that, if you're making mistakes, they're probably going to be recurring. So you're most likely not going to make 30 different mistakes. You're going to make probably a handful of mistakes, and they're going to be the same ones over and over and over again because it has to do with your personality. Trading has a lot to do with your background, your mindset, your belief system, and your personality. So it's inherent to each one of us, and it's independent to each one of us how we trade. You can have two traders look at the same stock, look at the same chart, and one make money and one not because of the personality of the person, the way they think, the way they behave, what triggers them, and so forth. So as you go through your journey and learning, analyze your tendencies, and then adjust for weaknesses. Like that, you keep on growing. You start seeing the same things over and over again. Trading is very simple. It is very difficult, but it's very simple. It is not hard. It's simple. It's the same thing over and over and over again. You're looking for a pattern. You're looking for a setup, and you trade that setup. You narrow down your list to viable candidates. You have I go through 500 anywhere between 250 and 500 stocks charts at least weekly. I used to do it daily, but the market's been so bad. There's nothing setting up. So now I'm doing it, every Monday, Wednesday, Friday, and definitely on the weekends I go through more extensive lists just to see a setup, and then I filter that list through my scan and on proprietary scans to spit out the ones that are really are key right now, right here, right now. And then that's the list I sent you today. I'm gonna filter that list down from 300 stocks, 200 stocks, 150 stocks. I'm gonna narrow it down to like 30, 40, 50, or even less, depending on the market. The market's going to dictate that list because if the market's doing good, there's going to be a lot more setups and a lot stronger stocks. One of my priorities is basically looking for things over 50, looking for stocks that are over the 50 period moving average. So the stock is in a bear market. There's going to be only a handful that are going to be, that have the criteria. That are strong quality stocks that have growth, that have sales, that have earnings, and that are trending in a positive manner. And then within that, I start setting my alerts for setups, my indicators and so forth to give me a proper entry to make some money. And I think I've done a pretty decent job of giving you guys those stocks and alerting you when I'm looking at them, when they're setting up, when I'm getting in, and then more importantly, when I'm getting out. If you look at the timeline of my chats on my post on Friday, I mean, again, when I say these things, I don't mean it in a bragging way or anything like that. I'm extremely humble by my mistakes and by the errors that I constantly make. We're all human, but I want you guys to understand what I'm looking at, and I'm trying to share that with you. When I see the markets going down, heed to that. Look at it. If you disagree with me, that's perfectly fine. We can have a discussion, and then let me know what you're seeing, and let you know what I'm seeing, and then we can learn from that on both sides. Like this is the chart that I sent you a screenshot. I sent you that chart when it was here. Let me see here. When it was here, this bar. Sorry about this because I have like trend lines to give me alerts throughout the day. I basically run my business with assistants, right? So these are my assistants. Whenever I look at something, I want a trend line, I want an alert to let me know, okay, like look at me now, look at me now, look at me now. Something's happening that you want to pay attention to. Does that mean I'm going to buy or sell because an alert hit? But it's an alert for me to give me an alert to let me know, okay, look at me. Something important is happening right here, or something crucial is happening at this point that you should be aware of. And that's why I have these alerts and trend lines. If it like this trend line right here, if it crosses this trend line, then this could be moving up to the top side again. I can have a little cup here with a little handle, and then maybe I could buy somewhere right here, that kind of thing. So I have this trend line, and I have larger time frame trend lines, and I have key areas of trend lines that I want to look at. This is a 39-minute lower time frame, but basically what I saw here, this right here was shooting to the downside. Momentum. This is the momentum indicator. When it's light blue, that means a strong uptrend. When it's dark blue, that means the uptrend is fading. It's coming down to like a slowdown period. And then when it's red, it's basically it's falling. Subsequently, when it's red and it's going back to yellow, that means the momentum to the downside is subsiding, just kind of like the upside dark blue. Then you have a nice little period of stop going down, possibly go sideways, and if you go back above the zero line, you're a buyer right there. That's basically it. So I do a trend line here. This is the zero line. So this is positive, this is negative. So I point this out to you guys. Let me clean this up. I point this out to you guys at this bar, at this junction right here. This is about 12:30, let's say 1 o'clock in the afternoon. And then what happens since then? What happens from this point on? We were at 12:16, and we closed down, almost like 150 points lower. I made good money here. I was short. I told you I was shorting here, and I made money here, and I alerted you guys here to take advantage of this. Okay, just like all the other stocks that I gave you that we made good money on in the morning because the market rallied up. We had this nice move in the market, and then once it started breaking down, this big long drop here, I said, hey, listen, I'm getting out. I'm taking profits, and I started scaling out on my positions. I was selling into strength. I was taking profits on the way up, and then I was completely just shutting out, just closing out 100% on the way down to not give back any gains. And then once I saw the reversal, then I completely just changed from being long to now I'm short, and I'm making profits in this way. So this isn't day trading. This is just looking at the market. Why would you want to take this ride? Yeah, it might go up again, but why would you want to take this ride? Just get out. Get out. If you don't want to short it, don't short it. But at least get out of your longs and then have your profits locked in when you were there. Let me put in here, for example, one of our big winners. I made decent, really good money on this one. One of our big winners. This is the same time frame. This is a 39-minute time frame. The reason why I use 39 minutes and not 30 minutes is because it gives me equal bars for the day. If you do the math, there's 39 minutes divided in the week, whatever. It's easier for me to calculate. So basically, here's what happened. Here's the beginning of the day. This is one day, right? This is 9:30 a.m. This is at here 4 p.m. around there. So this is one trading day. So what happened here? Let me Here we had the entry from this nice little move here. So we bought, right? I bought from yesterday, so we had this nice little gap of boom, 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 right? Now, once I saw this, I started selling here, and I started selling here. Then I kept it. Then then this is the 127 Fibonacci extension. That's why my first target was about 64.70, around there. It never really made it up there. So once I saw, the next one would have been the next one was gonna be 67.40, around there, just inside the the 168 extension. Usually when stocks travel, they travel this, and I'm not really big on Fibonacci, but I like how stocks normally tend to gravitate to those to that 127, 168 extensions on the way up, and then from there they kind of exhaust themselves a little bit, and then they come down again to a key moving average like the 50 and so forth. So let me so once I saw this, I started getting out. I got out at 63 something when I posted on there. And then why would you want to take it back down to 61 and lose, if you have 300 shares, that's $600 you give up and so forth. So when I was alerting to this, this is what I was looking at. I was looking at this breakdown. Why would I want to stay in a stock that's breaking down? This is a great company, great stock, but it's breaking down. Why am I going to give money back? Now, when am I going to get back in? I'm getting back in when it gets above the 21. This is 21. 8, 21, 34, 55, 89. Again, these are all Fibonacci sequence numbers. Because, it's a stack of moving averages that I've kind of learned that once they're stacked in the right formation, you have this growth. Once they're kind of like you see the kind of spaghetti lines right here, then this is just chop action. You don't want to be involved in this. You want to be involved when you see right here, this little area right here. So let me get this a little bit bigger. Right here. When you get this little area right here, when kind of started getting themselves crossing the right way, and then here, they start getting separation where they're looking the right way. This is where your entry would be right here. Boom. See, and the momentum is going up. So you get right here, you pick it up, let's say at 61, and you get out, let's say here is 62, and in a day you make a point. But again, I probably would have gone somewhere right here, in this area right here, in the 59.75, which is where I did. My cost basis was 59.80 on this stock from a couple of days ago. So once you see momentum start breaking down, you start breaking down key averages, then you don't want to stick around. And then once they start going up again, they get stacked up. You ride the momentum. Once they break again, and the reason why this is happening is because of the market. This particular stock, this particular scenario. Let me go to the daily. Let me clean this up. This particular scenario right here, it's happening on the daily, right? But with the market being so choppy and so heavy, it just pushes everything down. The weight of the market is kind of pushes good stocks down. So again, if you look at it right here, this was your entry, right? Look at the nice little base right here. Your entry's right here, somewhere in the 43, 44 range. Momentum is picking up. You're going back from negative to positive. The moving averages are stacking up positively. You have the 8 above the 21, the 21 above the 34, 34 above the 50, 55 really, and 55 above the 89. So once you get this stack scenario, boom. And then what do you do here? You kind of go sideways and you go nowhere. Since like August, you've gone nowhere. And then here you start building some action again. See how the momentum starts going down? And then you start getting some action right here around this area. This is where we started looking to buy. We were alerting to this and we were buying here. And we made some really good money from 59 to 64. That's 6 points in a couple of days. That's pretty damn good on a $60 stock. Okay, I made really good money here. And if you notice here, how they kind of go up right to that 127 extension. Never really made it up here because of the weight of the market. You're just pushing it down. I just want to give you kind of a little case study in this particular stock. If we made some good money on this one, it's been a pretty good winner. So when am I getting back in this again? I'm not getting back to it again up here because it's extended. I'm getting back to it again when it goes back to in the $60 range around there near. Let me put this up here. Let me clean this up. Here. 21. When it gets back here, this is what I was buying. 21. I'm getting in here. Over the 8 is extended. I'm not chasing over the 8. I'm waiting for a pullback to the 21 and then see a reversal. Then I'm in, which was here. I bought it right here when I started going up again. It cleared the 8. I added to it and I made some good money here. It came back to the 8, he left it there, and then it took off again and back down to the 8 on the daily. But the weight of the market is pushing this thing down. So again, I just want to give you kind of a little like what I'm looking at, the things that I'm keying myself on to look at. So the overall market. Let me clean this up. Again, guys, I mean, this is not something you want to be going long on, obviously. Okay, so we're below the 89, we're below the 55, we're below the 34, we're below the 21, we're below the 8. This cannot be more negative. And we have a shooting star here where you have the candle, the high of the day being sold off and ending at the bottom of the day. So I had a trend line here, and that broke down too. We basically almost, we broke down back to the June lows. We kind of broke that down. So we this is a kind of double-edged sword. It could be that we're gonna just be breaking down and continue lower, or this could be a scenario. Clean this up. This could be a scenario, or we could be, we can be going lower, or this could be, we came back all the way back down again to the June lows, retest, hang around for a little bit, and then go higher. I don't know. But what this is, see how the moving averages get stacked up on the way out? I want these moving averages to get stacked up on the positive side. Right now, the 8, 13, and 21, they're bearish, which is like the short-term moving averages. They're bearish. So I long term, and with momentum is really down. We're way below the zero line, If you notice here, right? So this is not an area you want to be sticking around too long for the longs. Now, when we have nice little rallies, when you have a couple hundred points in a day, and we have the right stock. That's why the right stocks are so important. That's why I give you these stocks, because these are the ones that are hot. These are the ones that are working. So we want to be stock pickers. We want to be able to trade in any kind of market and stay out, sidestep any hurting environment when things are going way down. You might want to put a short or two. We had a short. I was heavily short. Coming into this last couple of days, and we made, again, I pointed out to you guys, I gave you that, we made some really good money on that, and then when we started turning around, we had to be nimble and flexible enough to be able to get back in it again. But again, nimble. So when you see things breaking down, you want to get back out again. Let me clean this up. Let me look at the SPY. Again, I mean, these are just levels that I want to see kind of hold. If you notice some key levels, they kind of hold and then they bounce from there. And then once they break down hard. If you notice here, even this one right here, this 168 on the way down, it broke it. It came back to retest it, right? And then it's like, we're going lower. And then we're hanging around this level right here. So 371, 372. It's going to be a key level to break. If we don't break this, then we got to get out of this cluster. The next cluster is 378, 379. We got to get out of this cluster. And then 390 is kind of that third cluster. If we make it up to 390, then these moving averages are going to get like all wiggly here. And then this could be a reversal to the upside. But again, we are at 357 and we got to get to 389. That's a long way away for the spiders. This is like massive distribution. When you see this long, these long candles, this massive distribution. Now, the good thing is it's massive distribution, so we could have a nice little rally. I mentioned to you guys September was going to be, it's historically one of the worst months of the year. It played out. September was one of the worst. I mean, look what happened from here to today. Right? We had a nice little rally at the beginning of September because the beginning of the month usually has some money coming in, and then boom. I mean, we have been below, guys. We have been below the eights. So this is a very, very short term, fast moving average. We have been below the eight since mid September. Okay, and then I'm probably going to look into mid October till we start kind of like rallying up again. I don't see us October 1st. Again, we might have a nice little rally beginning from from October 3rd to like maybe October here. A nice little rally due to new money coming into the market, 401ks and pension funds and so forth. The beginning of the quarter getting funded, so the hedge funds and the mutual funds have to invest that money. So it might be new money coming into the market. But again, that might take us to the 371. Again, nice little rally. We could make some decent money on stocks that are setting up. But then we might have come down again to mid October, late October, and then have that Santa Claus rally November, December, as expected. Again, when it's expected, the market kind of tends to fool the majority. But it did play out in September. September was a really, really, really bad month. I mean, there's nothing but red sea here from like mid September on. So just be careful. Adhere to the charts. Learn how to read the charts. Look at the this is short term. This is kind of like intermediate, shortest term, intermediate long, and then long term. So you have an idea of where the market is trending in the short term, long term, and intermediate. I want to be a buyer at the 21 from an up strength perspective. I don't want to be a buyer at 21 from here. Once it clears to 21, I don't want to be a buyer here. I want things to start moving, because if this goes from here to here, it's probably going to go sideways for a while to consolidate this gain. These guys, with time, as time passes, they're going to get stacked up the right way, and then we go higher. Okay? We want to... You want something like this, from like... This is last October. Okay, let's revisit Father Time here. This is last September. Last September to October. September, nothing but down. A down month in September, right? And then we had a rally after the first few weeks of October. New money came in. We had a rally, and then what did we do? We came back down again towards mid October, the 15th, around there. I mean, I just looked at this right now. What did I tell you guys back on the chart we hit today? That we might have a little rally at the beginning of the other quarter because new money comes in, flush back down again to mid, and then mid to late, go up again. What happened last year? September. Horrible month in September. Horrible. Then what happens in the beginning of October? Nice little rally, and new money coming in. Then we flush back down again to like mid, 10-15 around, 10-18 or so. Boom. You had a nice little Santa Claus rally November and September. Now what happens here, where we had the high for the year, was right there. This was the high for the year, right? This is the beginning of the year. So Santa Claus rally, it's somewhere between mid-October to December. We kind of like went up a little bit, had a little vomit, flushed down at the end of November, and then we went up a little bit, had a little vomit, went up a little bit. So again, the market doesn't just go straight up. Now, when you catch these guys, these guys right here, right? You can make a nice chunk of change right here. You can make a lot of money here. The calcs and the PLLs and the PLMRs, whatever they're going to be on those days and those scans, those kind of type of stocks that go up 2 or 3 points in a day, 3 or 4 points in a day, when the market is basically flat or only up 100 points, and they're going up 2 or 3 points in a day. You could have a nice month and a half of really, really good money that's going to make pretty much half your year. You don't need much. I mean, you could be in 5 or 6 solid companies and be heavily invested when we have a nice uptrend, and you can make 30, 40, 50% in that period, and basically sit out this crap and sit out this crap, and you have a good year. You don't have to trade every single day. You don't have to trade every single week. You don't have to make money every single month. You just have to keep the money you make when you make money. So when these things happen, you don't want to give it back. Okay? I mean, look at this. Right here, this time period. Look at the moving averages. Okay? They never really crossed. When did they cross? When we started breaking down in September. So if you take somewhere around here, let's say, this is kind of chopping around, and you have this little traditional base here, and you have a breakout right there. So let's say from late June to, let's say, September, which is again September, a horrible month in the year. That's 2 years ago. Same thing, September. So guys, look at this. Yeah, you have some down, but the moving average never crossed. Okay, so you have basically all July, and you have 2 months of this growth right here. You know how much money you can make being in the right stocks, like the ones we are mostly in all the time. You can make a lot of money here, and then if you could avoid this right here, if you could avoid that, and keep this, you had a great year. And then when do you get back in? You get back in right here. When things start getting back up again. And when is this? This is mid-October, right? This is the 15th. This is mid-October again. This is September, right? This is September. You start breaking down. You go sideways for a little bit. You have a nice run up at the beginning of the quarter, right? Begin the first few days of the quarter. You have a flush down to the mid, and then you go up again. You're a buyer here. Make good money here. Okay? So again, I want you to learn these things. So you know where you're at within the year and within the trend. See? Moving averages stacking up the right way. Boom. You have a nice trend. Once they break the 8, you start getting out. Once they start getting spaghetti-like, where you got all crumbled up, that's just noise. You want to get out of this noise. And then, boom. Once they start stacking up, now look, they're beautifully stacked up to the downside, right? So you start shorting the heck out of it right here. And you make some good money here. Right? Once they start clearing, you see this trend, they start clearing previous resistance levels right here. Then you get out of your shorts. You wait for this spaghetti kind of to clear out, and you start seeing a trend up. You pick it up. Pretty simple. Okay, so this is where we're at right now. Clean this up. So this is where we're at right now. We don't want to do anything with this as far as being too aggressive. We want these guys to kind of line up the other way. This was a great short back over here. We kind of got to the resistance up here, and poof, we just flushed down. And then see how this kind of like went from like nice stacked up to the right side, and you get this little spaghetti kind of like commingling here the lines, and then they start stacking up now to the downside, and they're beautifully stacked up to the downside. You have a lot of force going down. So let me go through some of the stocks that we kind of like went over, that we looked at. Let me see. So Enphase made some good money on this one. It's in this little box right here. We kind of played these trades right here. We're kind of bouncing off support levels, and we kind of made some good money. I made some really good money on the Enphase the last couple of days, especially yesterday, Friday, when we got in right here the previous day, when we went up like 6-7 points, I was getting out at 5-6 points right here, and then I alerted, I'm out. That's it. I don't want this down flush to happen. So that was a very good trade. FSLR was up a couple of points. Again, let me put this down a little bit. Make some really good money here. What is this happening here? Look, it's going up. It's kind of going sideways for a little bit. This has the potential to really take off, guys. It really does. It's kind of coiling right here. This could take off. And when do you get in? Near 21, when it's consolidating, where the volatility within the stock is low. Made some good money on this on Friday as well. Again, the weight of the market is pushing this down, but if the market kind of takes off a little bit, this is one of the first companies that's going to take off because it's setting up that way. PLL, another one we made really good money on. And these days right here, it came back down to consolidation. It shut up a little bit, made good money here. Came back down again, made good money here. And then here, I got out of it when I saw the reversal back inside, and I took some small profits on Friday, but I made some really good money on the last couple of days in here. Again, this is not going sideways. It's shooting down to the low side. So I'm going to avoid this stock. I'm going to avoid this stock right here because of this. And look at the moving averages. They're kind of getting the spaghetti look where they're getting all commingled. I don't want this. I'm only taking clean longs when they're clean. When everything looks clean, that's when you wanna approach this. CELH. Again, this one is just because I saw this being extremely overbought. Oversold. I took a little shot to the A moving average coming down. Again, it's getting really like not clean. So I took my last profits here when it kind of started reversing back in again. Again, make some really good money in this run right here. And once it broke down, you get out. It's just that simple. Amps. This was a particular case just because again, we have a nice trend line, right? This is nice. We're stacked positive, right? The moving average is the right way. When it pulls back to the 21. It holds it. So you will be a buyer to say right here. If you were looking at it back in early September, you would have bought it right here at 11. You probably would have gotten out somewhere right here at 14 or so. That's fine. So what happened here? What happened in this gap down? They had a public offering. When the stock does a public offering, the price kind of readjusts to the new price. So they had a public offering at 11.50, and it came all the way back down to 10. So there's nothing wrong with the stock. Fundamentally, it's still strong. The moving average is still stacked the right way. We have this trend going here. So this is a great stock no matter what. Okay, I mean a great chart no matter what. You just had that one event. So I took advantage of it, and when it bounced off of here, I got in. I made some good money up here. When I started reversing back down inside 34, I got out. So it wasn't a 15% winner, but it's a 6-7% winner on a small price stock. You can go a little heavier and make a little bit more money here. So this is basically an opportunistic trade. That's all it was. Let's go through the other ones here. We went through Cox. We saw this. We dissected this a million times. So again, I will get back into Cox. If it goes sub 60, and then I go to a lower time frame. Right, I go to a lower time frame. So 63 is kind of like what I would get out again. So now on a lower time frame, I want this to reverse, at least get above the 34 on a lower time frame. If you want to go even lower to a 15, I wouldn't go lower than a 15. See, this is telling me right here that's probably going to come down to these levels right here. So, which it is. So it might hang around here for a little bit. So I might be a buyer if it comes back down to these previous supports here at 59 or so, and then you clear, let's say, like 60.25 or something. So this is a cluster area right here. This is a cluster area right here, and this is a cluster area right here. So if it comes back down and flushes down, it shakes out the weak hands. and starts reversing, I'm a buyer right there. I'm not a buyer as it goes down. I am not a buyer here. I'm not a buyer here. I'm not a buyer here. I'm a buyer here. Okay? So you wait. You pullbacks are not pullbacks because it's going down. Let me buy. No, pullbacks are this. You wait and then you set up a nice resistance level that it breaks down. Once it breaks it above again, then you're a buyer right there, and you take this nice run. This is the easy money. You don't want to fight for nickels and pennies. You want to sit back and collect dollars. Okay? I usually look at the 39-minute for my entries. So usually when this would happen, I'm probably gonna again, it's sitting right here to this support level. This little line right here, if you notice, and then it's kind of back to it again. I want this to flush a little bit lower, maybe down here. I want it to flush down here, I want sub 60, something in the sub 60 range, so I can kind of consolidate like I did here, and then you're a buyer right there, and you make easy money. So I want this to go down a little bit, consolidate, and then break above the 55 again, and then boom, somewhere in the $60 range, I'll be a buyer. Okay, that's just trading 101. Okay, I'm gonna give you also we had great winners. I took a loss in this one, but it was kind of like a large loss for me as far as percentage wise. I normally don't take more than 1 to 2% losses in this market. I took a 3.5 to 4% loss in this, just because it gapped down. It just basically gapped down. The CPE number came in a little bit hotter, and it affected the retail stocks. So I thought it was. We just got caught with our pants down. It happens, but you get out. I got out somewhere. I told you I was posting it to you guys. I was getting out somewhere in the 43, high 43s, high 42 areas. Did not let it go down all the way over here. I did not let it, continue holding it. That's it. Just it gapped down on me, and you take a loss. As simple as that, and you move on. You take a control loss. My risk management was right here. This was kind of my risk. That's why I have this trend line here. It broke it, but I'm gonna wait for the first 30 minutes to an hour of the day, to not be the guy that's selling it at 41 when I could have picked up another couple points. So I'll wait for the first 30 minutes. Once that happens, then I go here. And see what's going on. So this is the first 30 minutes, and then it flushed back on again. So okay, fine. What am I saying? What I'm looking at. Okay, I'm looking at for sure 1,000%. This is not gonna get below this at 100%. But then once I saw this right here, and then we went higher, the next bar, I go, okay, fine. What was the low of that bar? The low of that bar was right there. So when did I get out? I got out right there. I got out right there, 1,000% the rest. Now, when did I start getting out of my positions? Somewhere around here. Why? Because it never made it back up again to that high. So once I saw that the next bar closed lower than the previous bar, I was getting out right there. I was getting out right here in the 43 range. I was getting out right here, and then my last positions, the last the big 4% loser was down here. This was like 2.5, 3%. This was down. That's it. Line in the sand. I am not writing this sucker down any further. Simple as that. Just you can win all trades, but when the ones you do lose, you have a control 3 at the most 5.5%, and you take your winners to 7, 8, 9, 12, 15% winners. So you have a nice 2-to-1 minimum, ideally a 3-to-1 ratio where your losers are 1R to your winners being 3R, your risk. So you're risking 1 to make 3. At the minimum, you're risking 1 to make 2, and you churn that over and over again, and you do 1,000 trades of 2-to-1, 3-to-1. Even if you only write 40% of the time, you are going to be very wealthy. Just the numbers, it's math. Math isn't a lie. So that was the one loser we had. I think I had like 9 winners and that one loser. The winners were anywhere between 5 to 12, 14%, and that one loser at between 3 to 4%. What else? What else? What else did we have here? Crocs. On Crocs here, different. I have this in a different scenario because I have Crocs. I don't have it as far as buying shares. I sold premium on this one, so I sold the 70. So I'm short the 70, and I got 5.5 points for it. So my cost basis is 64.5. So somewhere right here, 64.5. This is my cost basis. So it really hasn't really violated my break even yet, even though it's been chopping around and really trending lower and just not kind of losing its momentum. And again, same thing happened. Retail stock, the CPE number came in hot, and then retail stock sold off. So I will be a buyer at 70 in Crocs if it goes to that point, which then I will have a cost basis of 64.5, and then I'm gonna sell it at 71, 72, and then get out of this thing. So I'm okay. I'm not in the water. I'm still good. I'm making. This is just now a premium selling scenario where I'm waiting for the 21st for expiration to kind of like see what develops with this one. So I'm good with this one. JBL was a really quick trade. I didn't give this because it's really, really, really choppy. I just saw this little indecision candle here when you have this big flush. I mean, you have an indecision candle. That means this can go sideways for a little bit. So I want to take a quick trade here. I made like 1.5% on this. It wasn't a big deal, just a quick in and out trade. But again, it was a little winner. AMAXN. This is one that I did post to you guys right here. Again, you have a nice trend going higher, right? The moving averages are stacked positively. You pull back to a 21-34 range, and you're a buyer right here. So I'm in this range right here. It went up a little bit. I saw some into strength. It came back in the next day, but it kind of closed higher. But I saw that it never really made it above the 8 moving average. So that kind of like gave me a sense of like, okay, the second this kind of goes a little bit higher, I'm gonna get out. It came back to a 21 in the flush down, and it kind of held it. But again, I didn't want to give my gains from back here. So again, this was like a 5%, 4.5% winner. Not a great thing. It just didn't pan out. The market just wasn't conducive to this thing going higher. The same thing with ELF. ELF was trending higher. It came back in again. I bought here. I kind of started selling when it peaked. I saw this little ADMA crossover. I'm not holding this to the downside. Again, I saw this on an intraday moving average. I saw, okay, this is getting up extended. It's getting up to these levels here. It's getting up. It went all the way from here. It went all the way from like, let's say 37 to 38.50. It's a 1.5 on a $38 stock. That's a pretty good move. So I was taking profit into strength here. Once I saw the reversal right here, I'm getting the heck out. That's it. This is topped out. I'm getting out. I avoid all this. And again, I posted this to you guys like around 1 o'clock around there. I posted it that I was getting out. I'm done. And I avoid all this mess and I keep my profits from down here. That's just simple trading, guys. It's just very simple. Let's see what else do we have here. 2 more. MNTK. Again, same thing. It's kind of going sideways a little bit. It's kind of shooting down. So when I saw this, kind of like the second day in a row, that's kind of shooting down momentum. I don't want to stick around for this. So it's the same scenario. I came to the lower time frame. I saw this. I got out right here when it started breaking down again. Once you get extended and then you don't cross over, you don't break the resistance. You get to a top moving average and then you go down. It's the same thing as buying, on the way down. When the stock goes down, it gets to moving average, and then you start buying here. When it crosses it, you start buying here. Same thing. When it starts going up again and it stops there, and then it crosses that previous bar, I'm getting out. So I was able to lock in nice 7.5% profit on this one. And the last one, PLMR. This was again, I was not around for this. I was not around for this. I was not around for this. I got out right there. Why? Because same kind of concept. This thing shot up, right? And then once it broke the 8 moving average on a lower time frame, this is 39 minute. Once it broke that moving average, momentum was going down. It just I didn't want to stick around. I had some nice profits from up here. I was taking profits, and then my remaining shares. That's it. I'm done. Now, how does this look like on a daily? Okay, and it's like it's holding at 21, right? But then, why would you want to go from 88.50 to 80? Why you want to give up 5 points on your position? So you're a buyer here. You're a buyer here at the 21. Once it starts crossing over, you're a buyer there. So you hold it. It goes above the 68, which is another key Fibonacci extension. Once it breaks it and it comes back inside of it again, I'm getting out. And I make a nice, 3-point move, 3.5 point move on a $8 stock. That's a good 5.5% that I can make some good money on. And that's it. And you get out. Simple as that. And then when am I going to get back into this stock? When it sets up again. I'm going to go to a lower time frame. I'm going to let it reverse back up again. Moving average is still stacked. This is the kind of stock that if the market was good, this sucker would go to 100 with no problem, But again, it's just going sideways. I have my little box here. It's just basically going sideways. It's been doing nothing since September. But within that, I make some good money here. So when am I going to get back in? When it pulls back in, go back down here to the support area around this area, and I see it reversing back up again above the 21. I'm going to get back in. I'm going to ride it to like at least 90, 91, and hopefully 95. But if I see it reverse back down again, key areas, again, I get out, I make a few bucks, and move on until the market is conducive to, sustain uptrends. Like here. You buy here, let's say at 64, 65, and let's say you get out when it breaks the 8, you're selling. You make 10 points. 10 points in 20 days. That's a rally, okay? It's going sideways. This is going sideways for a long time. It's going sideways here, right? This right here, it's just sideways. It breaks the box, you go up. This is going sideways for a while. It breaks the box, you go up, okay? Just that simple. All right, guys. I hope this was a little bit longer than normal, but I wanted to really dissect into a little heavier technical analysis on what I'm looking at, so you guys should start looking for these things and not be afraid to pull the trigger and not hold on too long on a position because you hope it's going to come back. Price pays, price action. Look at the chart. Look what's going on. It should be doing this. If it's not doing this and it starts coming back down again, get out. Okay? Just that simple. And if you see something that's kind of going sideways and then you see a little reversal, you get in. And when do you get out? When it comes back inside this line. Above the line is good, below the line is bad. Just that simple. I hope you guys made some really good money this week. If you didn't, talk to me. I'll help you. Talk to me. I really want you guys to grow and become better traders. Not be holding on to losers and not be hoping and wishing, but be pragmatic, be unemotional, and look for things to work out and read the charts. Learn how to read the charts. All right, guys. I'll talk to you guys sometime during the week. Be good.